Why did India's central bank decide not to change interest rates? Is it a sign that the economy is slowing down, or a strategic move to balance inflation and growth? Let's understand this from a UPSC perspective in just 3 minutes. So, hello everyone and welcome to the latest update series of Mastoora IAS. So, let's discuss about the news in brief. So, the Reserve Bank of India RBI has kept the repo rate unchanged at 5.85% in line with market expectations. The Monetary Policy Committee MPC chose to maintain the current policy stance, citing moderating inflation along with uncertainty in the global economic environment. From the UPSC perspective, why did the RBI keep interest rates unchanged? So the RBI has a dual responsibility for maintaining price stability, controlling inflation, and supporting economic growth. Although inflation has eased, several risks remain volatile: global crude oil prices and geopolitical uncertainties affecting supply chains, weather related risks to food inflation. Instead of rushing into another rate cut or hike, the RBI has adopted a wait and watch approach to access incoming economic data. Now, the second question is, why does this decision mean? What does this decision actually mean? Keeping the repo rate unchanged means borrowing cost for banks remain stable. Home loan and business loan interest rates are unlikely to change immediately. It provides policy certainty to investors and businesses, and the RBI retains flexibility to respond to inflation if inflation or growth conditions change. Now the third question arises that why is this important for UPSC? So this topic is directly relevant to GS paper 3rd Indian economy under monetary policy, inflation targeting, role of Reserve Bank of India, Monetary Policy Committee MPC, and economic growth versus price stability. So from the mains value addition, I have a small thought, as a main text, something which you can add in your mains answer writing. And if the question is related to this game, so you can add this in your answer writing. So it is, a pause in monetary policy should not be interpreted as policy inaction. A pause in monetary policy should not be interpreted as policy inaction. Rather, it reflects a data-driven approach that balances inflation risks with the need to sustain economic growth. So, now from the prelims fact, I have that repo rate, the rate at which the RBI lends money to commercial banks. Monetary Policy Committee MPC, it is a 6-member body responsible for setting India's policy interest rate. And an inflation target is 4% with a tolerance band of plus 2%. So at the last, I just conclude my words by just saying that the RBI's decision to hold interest rates reflects a cautious and balanced monetary policy. By maintaining policy stability while closely monitoring inflation and growth, the central bank aims to support sustainable economic development, making this an important topic for both UPSC prelims and mains. So this is all about the topic. So I hope you like the way of my explanation and you like the news. So for further more updates, if you want the PDF of this topic, so you can join our Telegram channel. The link is mentioned below in the description box. So thank you so much.